When you try to understand what crypto is or what the blockchain is, your head starts to spin, right? Especially if you're more of an old school classic investor like myself. I'll admit myself, I don't fully understand, how crypto works, what the blockchain is really.
I don't fully understand, how crypto works, what the blockchain is really.
He strikes again, ladies and gentlemen. He strikes again. Welcome back. In this video, we're going to talk about BTCY and ETHY, because if you want to generate passive income from cryptocurrency covered calls with an 18% dividend yield, there is no better place to learn about it than with Adriano Stephan from Passive Income Investing. Now, this guy gets a bad rap, okay? He's a millionaire. He's got a website. He teaches people about passive income investing. He's got a good heart, right? He wants people to retire early and basically live off covered calls and live their best life. How can you possibly hate on that? Well, I get a little upset when I see somebody that really doesn't have any financial background, at least to my knowledge. I mean, maybe you could post some proof, Adrian. I thought you worked in like computer programming or something. But when I see this guy post stuff like this, it really infuriates me, because the whole passive income, crypto, whatever, is all grift. It's all one massive scam grift. If somebody says passive income, if somebody says dividend yield, and they focus on dividend yield, it's probably a massive, insane grift. I would say 9 times out of 10. Why? Because it's an illusion. Now, Adriano Steria Stinky posted this video on February 16th, 2022, talking about these two crypto ETFs, a Bitcoin and Ether yield ETF. So let's read a little bit more about these, okay? So I went on the website and I looked up BTCY, traded on the TSX, and I read a little bit about it. So let's see. A simple and efficient way to access Bitcoin. Okay, so number one, Bitcoin, wildly fluctuating, intrinsically worthless digital coin that goes through massive fluctuations. So there's a lot of volatility in crypto. So you'd imagine the options premiums would be high, right? You'd imagine this thing would just be raking in options premiums. Well, we're going to go look at the total return in a second, or at least what I think is the total return, and it ain't that freaking great, okay? But let's read a little bit more. Earn yields while benefiting from diversification of the world's most popular cryptocurrency. From the diversification of the world's most popular cryptocurrency. If there's one coin in this with some call options, how is this diversification? Via secure exposure to Bitcoin and an active, aka high fee, option overlay strategy. So if we look at the fees, okay, look at these management fees. Look how much money you're paying just to get access to this. ETF ticker management fees, 1.1. Series F, 1.1. Series A, 2.1. So at a minimum, you're paying over a 1% management fee for a crypto ETF, okay? But what are the benefits? Monthly, you get your monthly check. Security, convenience. I mean, every ETF is convenient. You just buy it and sell it. TFSA eligible and high risk. Yes, ultra high risk. Now, the portfolio, here's what they do. They purchase a Bitcoin ETF, and then they overwrite covered call options on 10 to 50% of the portfolio, and they generate yields in addition to long Bitcoin as a component of total return. Total return is a combination of share price appreciation and income. So when you look at this ETF, what they're saying is they're writing contracts. They're basically obligating themselves to sell their underlying Bitcoin holdings if they are exercised if the Bitcoin price goes up. Now, what I'm worried about with this ETF is Bitcoin is highly volatile, and sometimes it drops massively, which may be beneficial if you have a covered call ETF, but it also spikes massively, okay? And if you have a bunch of covered calls written and Bitcoin goes through a massive bull market, you're going to be exercised. You're going to lose a lot of your underlying holdings at a price that is not beneficial to you. And you're going to massively lag the returns of cryptocurrency. All for what? Yield? This is such an odd thing to write covered calls against. I mean, if I was going to buy crypto, I would just be long, personally. I mean, I don't own that crap at all, but it's like holy freaking crap. Okay, so let's go ahead and look at the 1-year return. So Adrian Steria Stinky said on February 16, 2022, I don't really understand crypto, but high yield, bro. 54% down in the past year. And you may say, Christopher, the ETF went down 54%, but I mean, isn't crypto down? This freaking thing underperformed Bitcoin, okay? At least on a share price perspective. I couldn't find the information on the options premiums. But it underperformed on a price perspective compared to Bitcoin. How is that even possible? I thought they were just buying Bitcoin. How is it possible that it's underperformed Bitcoin unless this thing is like factoring in fees or something? It makes zero sense to me whatsoever. So this thing is underperformed Bitcoin. Now we go and we look at another ETF that this massive clown, he's a good guy, Strong. Why are you calling him out? You're just being mean and not nice. You're just jealous because he's a bigger YouTube channel. Okay. Well, we got the same thing here with Ethereum. Okay, they're writing covered calls, same fund manager, same dudes, okay, same ETF. The only difference is they're buying an Ether ETF and then writing covered calls instead of Bitcoin. Same fees, same insanely high fees. Well, how's this one done? Oh, it's down 59% in the past year. How is Ethereum done compared to that? Oh, only 46%. That's interesting. I thought covered calls were supposed to do good in a bear market because your underlying holdings go down, but you're generating premium, right? That makes sense to me. This thing is, oh my God. And this guy right here, why is he so popular? I don't get it. They could just pump videos like this, talk about my yield, bro, look at my yield. And then they absolutely wreck you and push you into garbage. And even if you were buying covered call ETFs, of all things, why would you do it with a highly volatile, intrinsically worthless asset? Because you know what could happen to you? If Bitcoin goes to zero, if it gets outlawed, or there's a massive bear market, which is entirely possible, you could still get annihilated because these funds are buying Bitcoin ETFs, which can track the share price. So, what's the lesson here? Don't just automatically trust anybody you see on the internet, especially this clown right here, Adriano Stinky Asteri. Have a wonderful day.